On the heels of a strong October jobs report, 65% of adults say that the economy is in excellent or good shape, according to a new poll from ABC News. I spoke with White House senior economic advisor Larry Kudlow about his outlook on America's economy during Sunday Morning Futures yesterday. The markets have been very volatile and nervous that the good times are not sustainable, that a slowdown is on the horizon. Are you worried about a slowdown on the horizon?
I'm not worried. I mean, I hear all this stuff about a sugar high and temporary and not sustainable. You got 3.1% rise in wages. You got 250,000. We're running solidly. You know who the biggest beneficiaries are, Maria? Blue-collar workers. Take a look at the numbers. The employment increase is largely centered on blue-collar workers. They're the big winners.
Joining me right now in this Fox Business exclusive is Bank of America CEO Brian Moynihan. Brian, it's great to see you.
It's great to be here.
Thank you so much for joining us. So you're the largest bank. You've got an incredible window into what's going on. Do you see a slowdown coming?
We don't. We see our consumer spending year to date is up about 9% over last year. It was up 6% the year before, so think it going from 3 to 6 to 9, so it's accelerating. During a given year, that would be $3 trillion of spending will run through our consumer team, and the economy continues to grow. Our experts have it at 3% this year, about 2.7% next year, so they're predicting it to slow a little bit. But think about that's higher than it was 1.3, 1.7 type of levels before.
So what do you see in terms of loan growth? I mean, how healthy is the consumer today?
The consumer is very healthy, and so loan growth on the consumer side is low, single digits, mid-single digits. That's consistent with the size of the GDP growth rate. And the good thing is, from a banking system, the credit is in very good shape for all the participants, and that's really good for the economy. And you think that continues? I mean, what are the metrics that you look at that are most important in terms of identifying where the weak spots could be? If consumers slow down spending, which means that if unemployment starts moving up and wage growth slows, but all those things are in great condition right now, but if the consumers stop spending, the American economy slows down. So from a Bank of America standpoint, I mean, you've had an incredible 10 years where you really rebuilt capital, rebuilt liquidity, and got this bank in, again, a #1 spot. Tell us where you see holes or opportunities to grow at Bank of America. Well, there's always opportunities to grow. The market share of the company in our biggest businesses would be 15%, so we've got a lot of room to grow. We got new markets we're opening up in retail platforms in places like Pittsburgh, Minneapolis, Denver, Indianapolis. We've got adding people in the investment advisory business, and especially geared towards middle-class America. We've got also more investment bankers, more commercial bankers. We're just out there driving the business. And then there's a whole digitization and mobile banking and all the things that are very strong for us. Tell me about that, because fintech has become sort of a sexy area of financial services, and it's because technology is really changing things. How are you using technology differently, and how will you do that in the next 5 years? Well, think about 2 or 3 different things. One is customers are using it. So we have 26 million mobile customers today. 35 million digital customers, and they do about 23% of their sales on the mobile device. So those are very important customer behaviors. Yet every day about 800,000 people walk into one of our wonderful branches and we do a great job there. So you have to have high touch, high tech, as we say. And then you move to how workers work. We are continuing to simplify the company. This will be, I think, our 6th or 7th straight year reducing expenses and reducing while revenue is growing, and that gives us great operating leverage. It certainly makes you stronger going into a new era in terms of interest rates. The Federal Reserve obviously has begun raising rates, and this is expected to continue. How does that impact B of A? Well, raising rates helps. In the end of the day, it's hard to explain to the general population out there, but as rates came down very low, we hit what we call the zero floor. We didn't charge people to put their money. So as rates rise, the industry gets back into equilibrium, and it's helped our net interest income grow. But the real question of whether rates are rising is what is going on in the economy. And the good news is the economy is growing. They're not raising rates to choke off inflation or anything like that. It's really raising rates to take the accommodation back out. That is actually good news, because that means the underlying economy is growing. Does it
challenge, though, B of A specifically as rates go higher and the yield curve changes? I mean, there's a lot of speculation that maybe you don't gain from higher rates.
Well, if you look, I think our net interest income has gone up about $2 billion a year for the last 4 years in a row. So I think that is $8 or $9 billion over the course of 4 years. I think that helps.
Yeah. So we should be happy then that rates are going to a more normalized level.
Yeah, and I think
savers will probably finally get to actually make some money on their savings.
It just means the world's getting more normal. I mean, we've had recovery that's very long now, and so the ability to normalize fiscal monetary policy in this place is good news.